Can you day trade without a price history? Yes, and I'm going to show you how. And no, I am not joking. You can trade without a chart, and in fact, many professionals at big institutions like banks don't look at intraday charts at all. Now, trading without price might sound a little crazy if you've never known anything other than charts, but it's really quite straightforward. It involves tools that you're probably already familiar with, but that the retail trader community just tends to neglect. I find that by putting the chart away and forcing yourself to rely on other tools, it kind of puts things in perspective, and you'll see where maybe you've been putting your attention on the wrong things. Now, it's easy to understand why retail traders have focused on price so much. It's the changes in price that makes you money after all, right? That's why it's always at the center of different theories of the market. For instance, we're constantly told that current prices reflect all available information. If that's the case, then the chart should in turn contain everything that you need to know about a market, right? The problem with this idea though, is that it's wrong. The current evidence suggests that markets do not reflect all available information. The reality is that there are a couple of things that stand in the way of prices being completely efficient. For one, there's just a lot of randomness in markets, and I do mean random. Apparently, market making strategies work better if they inject a little bit of noise into the market. So these strategies will literally use random number generators as a part of their strategy. Another issue is that many players are what we would call price agnostic. For instance, an index fund, they will buy based on monthly contributions, distributions, and rebalancing requirements. So there's a certain amount that they're going to buy regardless of what the current price is. And these are the biggest players that move markets considerably when they act. So if they don't care about such price patterns, what makes us think that the rest of the market should? And I'd like to point out that these are things that really don't have anything to do with people's emotions, which is what technical analysis is often focused on. Technical analysis has this idea that certain patterns are reflective of people's fear and greed. Human nature doesn't change, and so market patterns shouldn't change either, or something like that, right? But what I'm saying is that the very rules of the game results in certain behaviors and optimal strategies. Studying this is where the field of market microstructure comes from. That's an important term. Go find that section on archive.org. That's archive with an X. Now, there certainly are a lot of interesting things that we have learned from the field of behavioral economics as well, but they don't help as much on very short time frames. That's because the market is very, very sensitive to all orders. Buying has a tendency to move price up. So if there really is a pattern that results in profits, you'll start to size up with your positions with each win. Eventually, it gets to the point where the position moves the market so much, you no longer have an edge. Now, if the edge is caused by the very rules of the market, then that edge will probably always be there, even if you're maybe not fast enough to capitalize on it. There's a limited amount of money that's available for an edge like that. But if it's based on human behavior, then what tends to happen on short time frames is people recognize the pattern, adjust their own behavior, that in turn destroys the pattern. That's why you're just probably never going to find a short-term trading strategy that's profitable, but also popular, which just makes the whole efficient prices thing all the more ironic. Current prices are not fully reflective of all available information, but if you analyze a single intraday price series, it is extremely difficult to find any kind of statistical aberration that would result in a profitable strategy. In other words, the market is not very informationally efficient, but it is statistically efficient. And that is why trading with only price is so difficult and ineffective. Okay, so what do we do about it? Well, at the end of the day, any trading strategy is still going to be about ingesting data, analyzing that data, and using that analysis to determine what orders to submit and when to submit them. So if price is not enough data for a successful strategy, our only choice is to bring in other pieces of data. The way I like to think of it is that retail traders tend to base their decisions on information that is generated at the exchange. Everybody on the exchange has access to that information. So we really aren't providing any service to the market by basing our trading on that information. To actually provide a service that the market will reward us for, we need to bring in information from outside of the exchange. And the most obvious one being breaking news and economic reports. This is the perfect example of where you just don't need price at all. It doesn't matter what the current price is. All that matters is that other people behind you are going to buy or sell based on that news. So all you have to do is decide if it's a buy or a sell before the rest of the market does. And yes, often the market moves too quickly for you to take advantage of these, but the best ones usually give you plenty of opportunity to jump on board. It's really just a matter of having the guts and the account size to take the risk. Now, trading on news is a complicated subject on its own, but that's why I have a very thorough video on the subject with specific examples. Another piece of information you can bring in is sentiment. During the Twitter heydays, there were a ton of studies about scraping user tweets and analyzing that content to detect positive or negative sentiment. And now might be a great time to get into this sort of analysis because the social media field is changing. Twitter and Reddit changed their APIs, so it's harder and more expensive to do this sort of a thing. But then you also have people possibly moving to other networks because Twitter is possibly on the decline. There's a whole TikTok ban. So there's a lot of room where you might be able to find an edge as social media shifts. And you don't necessarily need it to be all quantitative and automated either. I find that you can get a pretty good idea of sentiment just from reading a wide variety of social media sources. The next one I find interesting not only because people tend to overlook this very simple factor, but because it ends up being one of the most powerful tools that we have, and that is just time. Like what day of the week or day of the month it is. There tends to be more activity on Wednesdays. I guess it takes a few days after the weekend for everyone to plan their next move. The treasury market tends to move up on the first and last days of the month because dealers are picking up inventory for the next month. There are certain behaviors that you'll see when it is close to a major options expiration or futures rollover. There are seasonal patterns in different commodities. Sometimes the best exit is to just wait a set amount of time before exiting. Some of the best performing systematic strategies users have shown me are as simple as buy at this time every day, and they don't look at that day's prices at all in their entry and exit conditions. Yes, they might use past price history to figure these patterns out, but current day's prices are not factored into the entry and exit conditions at all. And of course, it wouldn't be a Speculator Seth video without mentioning order flow. Price isn't even half of the data that gets generated at the exchange. Orders are being placed and canceled all the time, and we can utilize that data to enhance our trading. There is tremendous value in particular in looking at whether there are more market buy or market sell orders. And this doesn't always match up with whether the asset moved up or down, but understanding why these divergences are happening can keep you out of bad action and help you identify hidden opportunities, especially if you can use the other information that you have to explain why that might be happening. And that's really the key, because I'm not saying that price is useless and that you should never look at it. Look at my charts. I have charts. It's just that my charts contain more information than just things about price. I'm bringing in other stuff like order flow, like news, like sentiment. Price is insufficient on its own. Yeah, there are problems with price. There's really big problems with patterns people are drawing on charts. But the biggest problem with price is that you're trying to use it on its own. We can combine it with other more predictive pieces of information to create a more complete system. I mean, really, if you're going to run a backtest, you still need the price history to know what prices you got, right? You'll still need price to help you find and verify your edges to a certain degree, even if price isn't in the entry and exit conditions. And there are some situations where price can matter. So let's talk about that, because there are many that some people don't always think about that I think are worth mentioning. One is that people prefer round numbers. So that's like if the price ends in a 0 or a 5, or in the treasuries at 16, because that's half a handle. And if you're not in treasuries, don't worry about it, okay? There tends to be more liquidity and volume at round numbers And you can kind of play that to your advantage. I know this seems like a stupid thing, but that's kind of the irony, because it's one of the most well-proven things we have that relates specifically to price. We should also mention that momentum and mean reversion are things. It's just that to take advantage of these behaviors, you probably need to be playing on a higher time frame and deploying it across a universe of assets. So it's really more applicable to swing trading a portfolio and not day trading. If you want to know more about that, you can watch my video on momentum strategies or my interview with Andreas Klenow that we recently did. Options gamma is also a thing. This is where we analyze the strike prices options traders are trading. This can identify prices where market makers will have to make moves to hedge against changes in gamma. But again, this is a very complicated subject, and I have a video that goes into that one too. But I just would know, if you're trading index futures, which is like most retail day traders these days, this is absolutely something that I would incorporate into your trading. And more broadly speaking, tracking existing positions can potentially identify opportunities. There are models like my inventory cost basis that estimates possible market maker positioning based on filled limit orders. These models aren't as useful when there's a trend, but if nothing is going on and the market maker is in charge, such models can be very impressive. There's also all sorts of reports that provide varying levels of information that you might be able to use to sniff out positions. And sometimes market participants will just tell you where their position is. Like MSTR and Michael Saylor, they tell us pretty much exactly where they bought and how much. I don't know at what point that ends up mattering, probably years from now, but I think at some point it is going to matter. So I just told you way too much about how I trade and why, but let me know what you think. Maybe you have some other ideas, things that you can incorporate into your trading, things that predict future orders, but aren't based on what the current price is. Anything that we can prove about the market empirically is worth thinking about. And if you really want to know more about how I trade, I've been streaming practically every business day now for like, what, 7 years? So you can go back, watch my past videos, or watch video live and see what we were looking at in that market that was able to help us decide what we were going to do. It's every morning at 8:30 Eastern time. So I will see you guys then. And in the meantime, stay excellent, team.